All right, and we're live. So, yesterday was the big day, Fed day. The Fed was saying what they're doing right now, and Powell also had the press conference, and a lot of super interesting stuff that happened there. So, we'll take a look today of what's happening. How did the markets react yesterday? How are they reacting today? And how does this affect our positions? And with that said, welcome to Coffee with Markus and Mark. And today is Thursday, May 2nd already. And in this show, we're going to talk to you about what's happening and how we are trading these crazy markets. All right. I think, Mark, we need to jump to a 5-minute chart of the S&P 500 to see what happened yesterday.
Yeah, the 5 minute definitely gives you a better perspective because you had a quiet session and a nervous session as traders waited for the Fed. And Marcus, you always say there are three reactions. And the first reaction comes at 2 p.m. Eastern time when there's that Fed statement, and that's when the rate decision is shared. And so no hike, no cut. Rates stay the same, and that was expected.
That
And
was
then,
expected. And so there's a reason why stocks initially jumped because I mean, we talked about it this morning with our mastermind members. The Fed has basically multiple tools when adjusting interest rates. First of all, yeah, there's the interest rates, right? I mean, this is the big one. This is the hammer. But then they have this fine tuning screw, and this is the run off or run up of their balance sheet. So the Fed is buying treasury bills or selling them on a massive base. We're talking about billions of dollars. So they recently have been doing it $60 billion. And this is where they said yesterday, all right, we're going to reduce this sell off to 15 billion. So this is what can be construed as a little bit of loosening the policy. I mean, it's not using the big hammer of lowering interest rates, but this is the fine tune. So we start here. And this is where markets say, oh, okay. So you are a little bit more confident. You are not thinking about keeping it at the same pace. Interest rates stay the same, but the runoff of the balance sheet is slowing down, which initially meant good news. And we were jumping up from 5,020 to 5,090.
yeah,
And
so
then
as we got into that Fed press conference, which comes 30 minutes after the statement, we really started to rally. And part of this was that Powell basically said, we're not looking at raising rates, right? Which wasn't expected, but that's just confirmation. Traders like that. But then it comes back to the higher for longer issue.
right, and this is where I mean, this was kind of the first time that Powell said we are not happy with the progress that we are seeing.
Yep.
Where he said, okay, inflation has been coming down and it's sticky. No, he didn't say sticky. He uses his fancy words where he says, okay, we would have expected more progress. But this when one of the first questions was, okay, so are you planning to hike rates? And this is where Powell said, well, the next move of the committee is not very likely, or what did he say, is unlikely to be a rate hike. And this is where yesterday, so we have the 0.1% and the 1% for rate hike. So this has disappeared. But you also see, okay, higher for longer. So the higher we already know. So will it go much higher? And Powell kind of said, nah, forget about this. The longer, yes, he said much longer, probably. So this is when being asked during the press conference, because I watched it, and when he was asked, okay, so do you still expect 3 rate cuts? He was kind of like, well, so
Yeah.
right. So he didn't say yes, but he kind of said like, no, not really, without saying it. But this is why. Okay, so the good news is they are fine tuning it a little bit, and they're not raising interest rates, but they're also not lowering anytime soon.
Yeah. So markets were a little bit rocky yesterday. Some big moves higher, and then erasing all of those gains. The S&P and Nasdaq finished slightly lower. The Dow slightly higher, and then today we kicked things off, and we were up again.
Yeah, this morning we opened higher pulling back, and I think traders are still digesting of what did Powell say and what does this mean. And the big one is now the focus on tomorrow's job report. We can just go to the heat map here and then take a look at the economic calendar. So we have the big jobs report tomorrow because that is the one thing that Powell said yesterday. So, because when we ask, okay, well, what are you looking for? And so, since inflation is still high, when would you possibly cut interest rates? And he said, well, when we see a massive softening of the labor market. And he didn't say a little bit. See, Mark, we talked about it. Last year, he said, okay, the unemployment rate, I'm willing to run this up to 4.5% if needed to bring inflation down. Now, the FOMC committee has done a great job of keeping unemployment low, which is one of the dual mandates, and also bringing inflation down, right, Mark?
Yep. Yep. Price stability and maximum employment is the Fed's directive. But that does get a little tricky to balance the two.
Right. So right now we still see a strong jobs market. Even today, the unemployment claims kind of coming in line with the expectations. They were 208,000 last year. They were expected to come in at 212. They came in at 208. Okay. But let's talk about the labor cost here for a moment, Mark.
Yeah, so labor costs coming in higher than expected, and maybe typically this could be something that in this situation might pique some traders' interest, but it seemed like Powell kind of shook that off.
Yeah, because it was super interesting. In the beginning of the week, we did have, didn't we have some labor cost already at the beginning of the week?
Maybe
Yeah,
it
the
was last
employment
week.
cost here. Yeah.
Oh, there we go. Yeah,
So,
you're right.
yeah, the employment cost on Tuesday, was it on Tuesday? Yeah, on Tuesday, was much higher than expected. And the market said, oh, dear Lord, this is not good. This means that inflation is going higher. And markets on Tuesday, if we go back to this, kind of sold off. So let's go back to Tuesday on the chart that are not coming up here. So this is where we see that was Tuesday after this labor cost report. But Powell yesterday kind of said, yeah, you know what? I don't care about the labor cost. In fact, rising labor cost is kind of good because inflation is still high. And if wages are higher as well, he said, that's all good. I'm not too concerned about it. He said, well, we're keeping a very close eye on housing prices, which I thought was interesting.
Yeah, it is interesting. Higher, cost for housing for sure with the higher rates factored in.
Right? Yeah. This is where he said, well, we expect housing prices to come down and this will bring inflation down. However, he said there's a huge lag until we see this because it takes a while until landlords are lowering rent. And I mean, as you said, I don't see it with interest rates just being as high as they are. So looking at a daily chart here, I mean, 10 years, we know that right now for a 30-year mortgage, you have to pay what, 7.5% or more. So this doesn't mean that housing costs are going lower. It means that they are actually rising.
And especially if there's a bit of a supply issue where there aren't as many homes for sale. And again, if you had investment properties that you refinanced or that you financed at 3%, now you're looking at refinancing at 7. You're probably sitting on them. And even if you were trying to sell to move into a bigger house, that could be a tough jump with these higher rates. So I think that's going to be a tough one.
Yeah. And as you can see, there's a lot to unpack from this, and there's still a lot of
Yep.
uncertainty. And this is why the markets right now haven't quite figured out what to do. If you look at this, we're kind of at Tuesday's closing price. Just right now, a few minutes ago, we rose above Tuesday's closing price. So yesterday, kind of lower, nervous, then the PIA, and then, oh no. And today, the third reaction so far hasn't kicked in. This was reaction number 1, 2, and the third reaction that we see hasn't kicked in. It seems that it wants to push higher. But again, lots to unpack from yesterday's press conference.
So do you sell in May and go away, Marcus?
No, no, I do not. Even though, I mean, we must say, looking at this chart, going back to last year, let's see. Let me just zoom out and see what happened last year. So, where's May? Right here. Okay. So last year, this was May. Sell in May, go away. I don't know. Wait, here's last year. Here's May last year. No, I was looking at 2022.
In a bear market. Yeah.
Yeah.
Yep.
Nah.
Yeah, and I saw that there was an article on Seeking Alpha. It said that it actually over the last 40 years, during the summer months, especially if the first 4 months are positive, the S&P tends to be positive 75% of the time.
Yeah. I mean, long story short, the S&P is still stuck right now between the 5,000 level that we tested here this morning again and the moving average. And now we see. Tomorrow will be the big one. Tomorrow, the jobs report, I believe, oops, that's not what I wanted to show. There. I wanted to remove this. So if the jobs report comes in a little bit weaker than expected, we could see some fireworks. If it comes in line, we will see, I believe, some drifting higher, right? But if tomorrow we see that maybe the unemployment rate ticks up from 3.8 to 3.9 or 4.0, then we will see some fireworks.
Could be. Something to watch.
All right. Something to watch. What else? Want to talk about our positions or some earnings, or what do you want to talk about?
Well, let's see here. We could talk about Carvana.
CWNA.
Or Carvana, whatever you want to.
Up 38%.
Huge. So big jump here. Better than expected earnings. They reported a profit rather than a loss. So that was huge for investors. Also better revenue there. So huge jump for Carvana or Carvana. Yeah. What is it? Carvana, potato.
Oh.
Tomato.
Carvana.
Okay.
All right. Then on the other hand, DoorDash down 12% this morning.
Yeah, rough day for Dash being the ticker there. And they reported worse than expected earnings. They did better on the revenue side, but rough earnings per share this time.
Yeah. All right. I also forgot we should take a look at crude oil because interestingly enough, crude oil, look at this. We are right now at a 7-week low.
Yeah. It kind of snuck up on us, but it getting right back into those ranges that we had for the earlier part of the year. So at the upper range, but definitely pulling back from those highs when there was some of that uncertainty and fear in the Middle East.
Yeah. So that should help inflation. I mean, not in the short run, but probably next month in the reporting. So we'll see. All right, let's hop over to our position and see what is happening there. And first up, WTF positions. We did have a new position today, EMR, Emerson Electric.
Yep. So took that one, and you took it as well. And we will follow that. Look for a nice profitable exit.
Right. So entered at 107.20 right now, trading 80 cents lower. So we'll see what happens with this one. But that is a new position today. No exits, but we do have a couple of open positions. COP, ConocoPhillips, reporting earnings today. At first in pre-market trading, they were higher. Right now, moving lower after earnings. Down 1%. So as you can see here on the chart, we entered it at 125.08. Right now, trading at 122.85. So slightly below our entry. well above our stop loss, so nothing for us to do here.
Waiting for an exit.
Waiting for an exit. And then we had IBM. IBM, another one in our portfolio this morning, nicely bouncing off the 200-day moving average. So entered at 167.50, 164.18, and look at this. Beautiful bounce off the 200-day moving average.
Perfect. Now's the time to move.
Now is
To
the
the
time to
upside.
move.
Full
Jump
clarification
up
there.
and fill the gap. Fill that gap. And Target, TGT.
Yeah.
So up today, 1%, we'll take it. So also slightly down on this position. We entered at 160.83, right now trading at 157.75. So waiting for it to bounce back.
It's a waiting game sometimes.
It is. All right, talking about wheel positions, and on the wheel, first up, Apple. Apple reporting earnings after the bell, and this will be interesting because I own Apple shares at 167.50. I sold calls against it at 172.50. Right now, trading slightly below the strike price. And yes, Apple will move on earnings. It will happen. I believe. I believe that there will be a reaction.
And we talked about it this morning. Do you think that reaction will be to the upside or downside, Markus?
I think it will be to the downside. It will be to the downside for a very simple reason. We already know that iPhone sales are down. We also know that Apple poured a lot of money into the Vision Pro, and we know that sales are down. The sales are not going well at all for this thing. And we also know that Apple is way behind when it comes to AI. I mean, Google, Microsoft, even Amazon putting money into Perplexity and these tools. I think even Claude is backed by, I can't remember whom, but I mean, the big guys, Facebook, they also have their large language model called Llama. And Apple, we recently heard, and this is where we had this big jump here, that they are working on chips that would allow them to run AI locally on iPhones. And I think this will be the big one. This is what everybody is waiting for, that they make a major announcement this afternoon that either they're making massive investments in AI or they have made massive progress. If they say this afternoon, yeah, we love the Vision Pro, we're doubling and tripling down, that won't be good. If they say, yeah, we are just working on a new chip for the iPhone, forget about this. We have heard this. We already have the M1, M2, M3 chip, all of this kind of stuff. No, it will be all about AI this afternoon. And if traders and investors are not hearing what they want to hear, I believe the move will be to the downside.
Okay.
And
I'll
there you go.
say it's to the upside just because I want it to be down so I could re-enter here because I do not have a position and I would love for it to pull back a little bit. Sell puts tomorrow, get some nice premium and have a good entry. So since that's what I want to happen, and again, not because of any data, just that's what I want, Apple's going to go higher.
All right. Well, tune in tomorrow and you will know what is happening here. CSIQ opened a little bit higher today, pulling back a little bit, kind of also trying to figure out, okay, well, what does these interests mean for us? So nothing for us to do just yet. And then we have NEE that is so close for us to selling calls. In fact, this morning we put orders in for selling calls at 69 as well as the 70. Not yet being filled because we're pulling back a little bit, down 0.75% right now. But we talked about it on Monday that this might be the week where we sell calls against our existing position, and it still might happen. We still have another day.
Yeah, it felt good to have some orders in, and we had that nice start to the session, but with this pullback, no fills on what we wanted to get filled at, but it felt good. It felt good.
It felt good. It's going in the right direction. And then we have UPS. UPS a little bit higher today, but unchanged to the open. So kind of where we open up 1%. I'll take this, and nothing for us to do there other than drawing fantastic trend lines. Not this one, not a crappy trend line, a fantastic trend line,
There you
and
go.
giving UPS more directions on what to do.
There you go. I love it.
There you go. Okay, easy enough. All right, now we'll take another look at the S&P 500 in a moment to see where we are, but it is this time in the show where it's time for a dad joke. You got one? I think you won yesterday. I saw it in the comments that people liked your dad joke way better than mine. So,
Yeah, people. It seemed like the trader dad joke was a fan favorite, so I think we have to do another round there. So why
okay.
was the trader a good landscaper?
I don't know.
He spent years working on the perfect hedge.
All right. That is the trader joke. Now to the non trader dad joke. So, I recently burned 2,000 calories. Oh, that's the last time I left brownies in the oven while I'm taking a nap.
All right, all right, all right.
All right.
There you
And
go.
again, up to you. You vote. Which one do you like better? Mark's trader joke or my calorie joke? Let us know in the comments. We're always interested.
Wait,
What do you like better? Okay, now looking back here at the 5-minute chart of the S&P 500, and we are just kind of where we opened right now, and traders are still trying to figure out where do we go from here. And tomorrow will be the big day. I wouldn't be too surprised if we are just hovering around there. I mean, Dow is up 0.6%, S&P is up 0.5%. Nasdaq is up 0.85%. I wouldn't be too surprised if we keep hovering around these levels, maybe a little bit lower. I don't think that we'll turn negative today. I think we'll stay positive, but I think the big reaction that we're waiting for is happening tomorrow.
yep, I would agree. It seems like okay, one thing out of the way, but now let's look at jobs. So it'll be a fun
So
one.
you want to make sure that you definitely tune in tomorrow morning. So if you haven't subscribed yet, click subscribe. Click like. We really appreciate all of your likes. And let us know in the comments which dad joke you liked better. Also, if you believe that today there was tons of great information in there and you would like to share this video, there's a share button right underneath. Please do it. Really appreciate when you're spreading our videos. And with that said, you got to tune in tomorrow morning. And until then, have a great rest of your day.
Happy trading, everybody.